Meantime, we're back convening our Goldman Sachs All-Star Task Force with Jeff Hart of Sandler O'Neill, Matt Albrecht of Standard & Poor's. And we're talking about ways to try and turn things around, their fortunes there. What about an acquisition of some kind? You know, a State Street has been talked about as a possible acquisition there. Matt, Jeff, does that make any sense to you?
Well, on one hand, it makes more sense than some of the other things I hear, and that at least with State Street, you've got a custodian business, and you could get, hard to borrow securities, so there'd be some revenue synergies. But I still think kind of the valuation spread between the two would make Goldman an unlikely buyer. And I'm not so sure that the cultures would blend together well. I mean, at Goldman, you've got a very risk-taking culture. That's not so much the way things are at State Street. So that one's possible, but I doubt it.
But as you said, the business model has to evolve in this climate.
Yeah,
Maybe
I mean,
they take less risk.
I think it's certainly a more viable concept, at least in my mind, than, say, Goldman Sachs going out and buying a retail bank. But, culture's everything when it comes to investment bank integrations, and I'm still not sure that those two cultures would integrate as well as you would hope.
Matt? Oh, go ahead. No, go ahead, Michelle. All this talk about going private, they got a market cap of $27 billion that have to pay some premium. Is there any way that even Goldman Sachs could raise that money in this market?
Well, I think if anybody can do it, I think they have the reputation and the wherewithal to do it.
No, absolutely, but could they?
I think they could if they, their management has such a, I think, a web of relationships out there. I think they probably have that capability to do so. I think it's probably something that's certainly been talked about, although I don't see it, at the current time. I think there's too much value in that franchise that other people might realize there that would actually outbid some of the managers.
Hey, Jeff, I always hear that Goldman is a stronger firm than Morgan Stanley, yet Morgan Stanley is up double off of its low of its stock price, whereas Goldman is trading right down near its low. Why is Morgan Stanley getting treated better if Goldman is the smarter bank? Jeff?
Well, I mean, I think you got to look back as to which one's being treated better. And I mean, Morgan Stanley's been certainly more beat up. I think some of the chinks in Morgan Stanley's armor, at least to people's mind, came in the fourth quarter of last year when a mortgage-based prop bet really kind of blew up on him and drove him to a loss. I think Morgan Stanley's going to be a survivor. They just maybe don't have quite the management team or quite the balance sheet of Goldman Sachs. But I mean, I upgraded Goldman Sachs today. I'm, thinking similarly about Morgan Stanley, just not pulling the trigger for an upgrade at this point.
And Matt, does Goldman survive independently here, or do they get bought?
I think they survive independently. I think they have such faith in that management team by a lot of people. I think there could be investors maybe in the firm that would, be comfortable giving the money to that management team and letting them do what they feel needs to be done. I don't see them being acquired at this point.
Jeff, you said earlier your advice to Mr. Blankfein would be try not to be something other than, try not to be something other than what you really should be. The question that I have, though, is they really were an investment bank. They've kind of been forced into this new role because of all the changes. How long before the business model evolves? Because you say they have to become comfortable with the business model. They have to allow the business model to work. But how long is that going to take?
Well, I think you have to be careful here not to secularize cyclical trends. During cyclical downturns, the brokers always deleverage. The brokers historically have always traded below tangible book value. That's kind of what we're sitting at here. So I would look forward and say, what can we do to improve the business model? But what they don't need to do is go out and try to become a bank. What they don't need to do is go out and kind of try to pick up businesses they're not. I don't know exactly what's going to drive the next upturn in activity levels, but I'm fairly comfortable that equity origination, debt origination, M&A aren't going away. They're attractive high-return businesses. Goldman should kind of stick to what it's good at, and if it changes anything, try to change the funding mix as opposed to changing the business mix.
And there you have it, some free investment banking advice for Wall Street's premier investment banker.
I'm sure they're thrilled.
Only on Power Lunch. Jeff, Matt, thank you both for joining us today.
Sure.